Joining us now is Dan Greenhaus of Solus Alternative Asset Management and Mona Mahajan of Edward Jones. Dan, you're here on set. I'm going to start with you because I'm looking at your notes here. You seem pretty bullish. I mean, the S&P just closed at 4411. You think we go higher from here?
Yeah, I certainly think the basis for the reason why we rallied so far probably takes you into the end of the year. And these are all views that have been articulated before. There's nothing new. You had the market down 10% or so from the high. You're entering the seasonally strongest period for the market. Rates have come off the highs. And I think when you put that all together with an earnings season that went on balance pretty well, I don't see why you shouldn't continue to rally into year-end. Admittedly, much of that has already happened. But still, I don't see why you can't have a little further gains into the end of December.
Okay. Mona, I'd imagine you see it similarly looking at your notes. But the key question for me is, how does this set us up for 2024 then?
Yeah, it's a great point. And look, I do think there's some momentum heading into year end as well. We think some of the winners of 2023 will continue to probably show some leadership as we head into year end. And we're seeing that already as the mega cap tech space, that Magnificent Seven, continue to lead while the rest of the market has kind of lagged. Now, as we think about 2024, this is an environment where perhaps the first half of the year, we see a little bit of consumer slowdown, which leads to a bit of an economic softness ahead. Keep in mind, we're already seeing consumer credit card balances accelerate. Delinquencies are starting to pick up. We have tight lending standards, as we know. So these are all headwinds for the consumer. But all that being said, as we look towards the back half of 2024, we could see a bit of reacceleration once again. So we do think as we come out of a period of softness, that is really when you get this broadening of market participation. So maybe it's not just the Magnificent Seven, maybe some of that S&P 493, which, by the way, is very favorably valued now. So a little bit more scope for upside, continues to show some leadership or starts to show a better leadership and more participation. So we think parts of the cyclical market, even small caps to some extent, and maybe even international start to play catch up. And when we think about our balanced portfolios, we think bonds are a much more meaningful part, even in 2024, of most client portfolios.
Okay, well, sticking with the consumer for a minute, Dan. My kids play piano, and they can practice for months, but then there's a recital. And it feels like we're at recital time for the economy, right? Because is the consumer going to show up in Q4, and for whom? And that starts in about 10 days. How important is the level of consumer spending right off the bat, Black Friday, Cyber Monday? Are there specific stocks that you're looking at or sectors as being affected?
Well, first of all, let me say with respect to the consumer, some of what Mona alluded to, the higher delinquencies and the credit card balances going up, and with all due respect to Mona, these are observations people have made for many months. And for me, Mike Santoli made a joke earlier about how he's outsourcing his view on the Fed to the bond market. I outsourced my view on the consumer to Visa and MasterCard. Visa, full disclosure, a stock I've owned personally for 15 years or whatever it is. Visa and MasterCard have told us that consumer spending on balance was fine. Now, we've heard from them and a couple of other companies that maybe there's some problems at the lower end of the consumer. And you see this in the auto delinquencies happening at subprime, and you see this in some of the credit card balances. But on balance, the consumer's doing fine, and I don't see any reason. There's been nothing has changed meaningfully in the last few days or weeks to suggest that this earnings season or going into the Christmas time, so to speak, is going to be suddenly weak as compared to the previous couple of weeks. So I have a little bit more of an optimistic take on the consumer than it sounds like some other people.